There is a personal guarantor. The bank files Section 95 application under IBC. Still, the case gets rejected. Why? Because one legal step was skipped by the creditor. Hello everyone, welcome back to our channel. Thank you so much for joining me. This presentation is brought to you by Synergy Business Advisory Group Noida, a multi-disciplinary professional services firm delivering end-to-end advisory solutions. Today we are discussing a very important NCLT judgment of 2025, popularly referred to as LML case. This judgment is extremely important for banks, NBFC, financial creditors, and anyone dealing with personal guarantors under the Insolvency and Bankruptcy Code. In State Bank of India versus Deepak Kumar Singhania, the corporate debtor LML Limited had already gone into liquidation. Mr. Deepak Kumar Singhania was the personal guarantor for the company. SBI issued a demand notice under Rule 7, Sub-Rule 1 of Application to Adjudicating Authority for Insolvency Resolution Process for Personal Guarantors to Corporate Debtors Rules 2019, and upon failure of the personal guarantor to make the payment, filed an application under Section 95 of the IBC against the personal guarantor. What the NCLT and NCLT decided: the application filed by the State Bank of India under Section 95 of IBC was first considered by NCLT. After examining the facts and legal requirements, the NCLT held that the application was not maintainable and accordingly rejected SBI's application filed under Section 95, primarily on the ground that the personal guarantee had not been invoked in accordance with the terms of the guarantee. SBI filed an appeal before the National Company Law Tribunal. However, after reviewing the statutory provisions and the terms of the guarantee, the NCLT found no error in NCLT's reasoning. The appellate tribunal therefore dismissed the appeal and upheld the NCLT's order rejecting the Section 95 application of SBI. Why was the application rejected? The reason was very clear and very important. SBI had not contractually invoked the personal guarantee before initiating insolvency proceedings. The NCLT clearly held that prior contractual invocation of a personal guarantee is mandatory before filing a Section 95 application under the IBC. A statutory demand notice under Rule 7, Sub-Rule 1, in form number B, cannot substitute invocation of the guarantee. A personal guarantor does not automatically become a debtor just because the company has defaulted. The guarantor becomes liable only when the guarantee is invoked as per the terms of the guarantee deed. If a guarantee deed says that payment is to be made upon demand, then the creditor must first make the demand as per the contract. Until such demand is made, the guarantor's liability does not arise. Only when the guarantor fails to pay after the contractual demand can a default be said to occur. It is only after this stage that insolvency proceedings under Section 95 of the IBC can be validly initiated. Why this judgment really matters? This ruling protects the sanctity of contracts and ensures that the insolvency proceedings are not misused or prematurely triggered. It also serves as a compliance guide for all financial creditors. This is CA and insolvency professional Praveen Agrawal thanking you for watching. I hope the episode is helpful for you. Subscribe for more such videos. Thank you.